Hi everyone, welcome to another live streaming event on Crypto Tips. My name is Heidi.
And I'm Toby.
And, oh, sorry, your head's cut off a little bit from the camera. Let's see if I can't push the camera back with my phone. There we go. Okay, hi everyone. Welcome to another live stream event. We have a few things to talk about. Some new agenda like Ethereum, what's happening there. Also, I have a really interesting tip for those of you who are wanting to get a heads up on what a scam project could look like ahead of time in DeFi. Also, what are the best Bitcoin investors doing? Hint, it's something that we are always recommending for you to do as well. Not that that's investment advice, it's just something to think about. And also, one popular index that might be needing to change the way it's calculating how things are going in regards to Bitcoin in the future. So anyway.
What's up,
hi.
UK? W, Dragon Ball, good to see you guys.
Jan.
Hey. Anthony, good to see you. Dave D, Richard O, and David Wynn.
Dave
up,
D, cancel the live stream. I need a price drop. Yes.
Hey from New Brunswick,
Speaking of
Canada. What's up, Jay?
Dave D, thank you for that. This is a question I want to voice to anyone who is watching the live stream now, or if you catch it later on. Not saying that this current bull market or bull run will be exactly the same as others. Who knows how this one is going to go, how high it's going to fly. But in past bull markets, we've seen 30 to 40% drops that are quite regular, really, or should be expected. So this is the question for you. If we see a dip of 40% of price of Bitcoin right now, would you take that chance to buy it? Or is your gut reaction now saying, I don't know if I want to be holding Bitcoin if it drops that much. Like, what's the future of Bitcoin? Because however your gut reaction is to that scenario or that question, would you buy the dip when it actually comes down to it, will tell you ultimately how new you are to this space and how much you know about this technology and really the implications of it and its disruptive power and how that can benefit you. So we'll be eager to see how you guys respond to that in the comments.
Yeah, for sure. I mean, I think I've seen this happen where it would drop the last 7 years, people would say, oh yeah, I can't wait to buy it at this price when it drops.
Yeah.
And then it drops to that price and then it goes back up and they never bought. So it's just like, I don't think because there's so many institutional investors wanting to get into this space, I don't think that a lot of retail is going to be able to get in. It could be so fast. It could be like a big spike down just to clear all, leverage positions and then right back.
Yeah.
That's what I think. I mean, who knows?
Yeah.
If there's even a dip. If this is a different bull market. This is a way different bull market, by the way.
Yeah.
There's no retail right now. Like CNBC, and when's the last time they said that? When it hit all-time high once, it made front cover, then nothing. So just wait. Wait till the retail comes in. This could be way after the institutional investors.
And what we're going to talk about today is another instance of why that also might be delayed as well for retail, or at least one more barrier of entry for them. Talking about buying the dip real quick, I know some people, like on our Patreon, I'm frequently addressed or asked this question by new Patreon members, which is fine. That's why I have that account, so then I can help people kind of figure their way through this whole cryptocurrency thing. But a lot of them want to ask like, oh, do you sell at the top, or do you sell like the kind of like the minor price movements to buy the dip again? No, we dollar cost average. We take our rewards from things like staking coins or from other ways that we earn our income, and we accumulate Bitcoin that way. We're not risking the position that we already have in Bitcoin or any other coin that we're thinking of accumulating more. We're not risking that to try and get more when it dips, if it dips. No, just if that opportunity presents itself, we're injecting new capital really into that position. So I just wanted to clear that up for anyone who's new.
It does become like a full-time job because like you have so many, say for instance, you have 10 different coins that you're staking or whatever. And so you have to decide, okay, how much of that portion of that stake do I use that daily stake or weekly stake or whatever? Because eventually, like if you have enough staking coins, then you'll be able to get paid every single day. Something will come in every day, sometimes multiple times a day, especially if you're mining or whatever. So like, and then you got to decide like where do I throw this capital? So it becomes that's your biggest problem, and then you could probably quit your job, because that's
an interesting problem to have.
Yeah, I remember
too many streams of
when
income.
I first started doing that. I'm like, wow, this is crazy. Like, this is taking a lot of time.
Yeah.
Or I could just leave it, but I realize that this is like a really rare piece of time that I have right now. Like, I'm not going to squander it and just be lazy and go, I'll deal with it later. No way. Like, I want to, whatever I do right now is going to affect me so much in the future. So I realize that, and that's why I'm not going to like squander that.
Yeah. I mean, that's kind of been the theme of our life together is taking action when we can to be advantageous to that. Okay. So
Ruben Santos asked, do you think 2.0 will spark any kind of bull run? I don't think it's going to spark. I mean, 2.0 is like a nothing.
Yeah.
Like
in
event.
like 2 years, maybe. When it's really going to launch. It's like in 2022.
Yeah. I mean, 2.0 is essentially just staking. And, and like, I'm not going to stake anything because I don't want to put my coins at risk, or not at risk, but like staking for 2 years, locked in.
Yeah.
There's just no way. So I think that, that I'm just going to pass on that.
Yeah.
Thank you, W.
Thank you, W, for that live chat tip. That's great. He asked, as I find it difficult to identify other altcoins, would it be okay looking at a 5-year span to only hold Bitcoin? Thank you, guys. So fair enough. If you're not comfortable investing in an altcoin because you can't decide or quite figure out, how honest it is or what they're actually trying to accomplish or, the future value of that coin, no one has a crystal ball here, but fair enough. I think that's a very safe and conservative, but solid investment plan is to get at least in Bitcoin. What do you think?
Absolutely. Like, I mean, you have to understand like what is happening right now with the World Economic Forum. They are wanting to get rid of anything that you could possibly own, whether it's land, real estate, a car or anything. So like the only thing that you could possibly own in the future to purchase things on like the black market or whatever, which is outside that realm, is Bitcoin and other things like Monero. And, there's something that you hold your private key. So yeah, I mean, Bitcoin, you're going to be fine, I think. I mean, it's the most secure network in the world right now. So you're set.
Yeah. Mark D, you got a great question. I'm going to get back to that, actually, if you can remember to check back on that after. I want to cover this first topic at least here. And Ann Alien, what do you think about Staker or STKR? I'm actually going to cover that right now. So right off the bat, challenges of ETH2 staking. Ethereum 2.0, it was launched on December 1st. And so now you can stake your Ethereum. There's a lot of things to pay attention to. This is not your typical proof of stake coin at this point. If you're comparing it to things like Tezos or Cardano even, or Cosmos, or there's a lot of different staking coins at this point. But Ethereum is different because this staking ability is kind of coming in the transitional stage from the Ethereum proof of work chain to the Ethereum proof of stake blockchain, really. And so because of that, if you're staking right now, if you're running your own staking node, you need 32 Ethereum, and you are sending that Ethereum into a contract address. Right now, that's kind of a one-way contract address, because when the time comes that you would be able to withdraw those staking coins, you will essentially be withdrawing Ethereum 2.0 coins. So that's why there's this delay between when you're able to withdraw, because it's dependent on when they actually roll out the complete upgrade to proof of stake. So this is just the beginning phases of it, really. So that's a thing to pay attention to, is what you mentioned, the 2-year lockup. That's also assuming that, Ethereum meets those milestones consistently 2 years is a long time, especially in crypto. And I mean, not to hate on Ethereum, but I joke about it all the time. Who knows when they're actually going to come out with this, because it's a joke at this point, like how delayed sometimes these updates can get. But anyway, first risk to know is that lockup period. Second risk to know is if you are running your own staking node, this being brand new smart contract, brand new code that you're interacting with, there's going to be bugs. Just know that is a guarantee. And actually, if you're going to go ahead, and I went through the process of setting up a node, and they have you actually confirm and accept the terms of this questionnaire, pretty much acknowledging that you understand the risks. And one of those risks is that a bug in the code might actually cause your node to be slashed. That means you lose the 32 Ethereum because of a bug, and that's it. I don't think there's any, not going to be able to get it back. So that's a big risk to also pay attention to. And so here's the thing. Right now, actually last night, when I was writing out the newsletter, the percentage of APR was 15%, and then 3 hours later, it already dropped to 14%. And that percentage isn't determined by how much Ethereum you're staking. It's determined by how much Ethereum everyone is staking. Basically, it's their way to either incentivize or de-incentivize people staking nodes. I mean, obviously, they'd want as many nodes as possible for the sake of decentralization, but as it becomes more crowded with nodes, that percentage will drop. So they say to expect anywhere from 5 to 20% returns annually for your staking nodes. But that number, especially now as it's new, it's going to fluctuate a lot. It's probably going to drop even more. I haven't checked it today. I'm sure it's even less than 14%. But again, as people are kind of turned off by that lack of rewards, and people are no longer running their nodes, or they back out of that position, if they can anymore. I mean, can you back out of staking actually if you're locked into that contract? That's an interesting. I don't think that's so. That's an interesting thing if anyone can figure that one out.
I think it'd probably be a huge percentage off, but I mean, still worth it if Ethereum, went 10x from here, and they took a 20% slice off it for you taking off.
It's still really good.
I'd still take it out.
But I'm saying
I think it's locked.
Their incentive model is that if people are leaving, if they're no longer staking, the percentage rises to encourage more people to come in. But if people can't unstake their coins for 2 years, does that mean that they're locked in for 2 years?
I think so.
That's interesting.
So, I mean, why do that? Why even risk that? You can just go to Gemini or put your coins on BlockFi or go find
Coinbase or all these things.
Or just put it into a liquidity pool and then get,
Yeah.
I mean, it's just as risky.
Yeah.
I mean, come on.
That's very true.
If you have Andre's the cover, which is the insurance for that Andre Cronier
I don't know.
I think using. So if that has already done the accounting for the smart contracts that it's under, it might be safe. But then again, you're risking it all. That's why I'm not doing any of that. I don't touch this stuff. It's it's not worth it. There's too many bugs, and it's just really not worth the risk. Yeah. I mean, for what? For 10% or 14% a year? Guys, if you're worried about 14% a year, Ethereum's going to do much more than 14% a year.
That's the thing. That's the two things to pay attention to with staking coins: the percentage of return and the appreciation of that coin. Because you're getting paid out not in terms of dollar amount. You're getting paid out in a percentage of coins. So if that coin is appreciating in price, that's great. But I mean, compared to a lot of other staking coins, that's 14%. 10% is really good. The average is 5 to 7.
I don't know.
And some of them are coins that aren't really doing anything. So for people who are really getting into staking coins and really motivated to get that as a passive income, that could be a big difference.
Yeah, but you're going to be pretty pissed off if it does a 10x and you're stuck with 14%.
Yeah.
you're going to be like, oh, what did I do?
Yeah, that's true. Well, okay, some people are saying, yeah.
What's up, Tracy? What's up,
yeah,
Mike?
Hey, Tracy.
What's up, Summer?
You can remove your stake,
Skynet.
but you cannot withdraw your coins. So that's
Matthew.
cool. So you can, like, you know, maybe not run the risk of running that node if there's bugs in it, but you can't get your coins. But so anyway, talking about one solution for this whole lack of being able to access the value of your coins during this whole 2-year plus lockup period. There's going to be more coming. But right now there's that company Staker, STKR, that are offering people the ability to stake their Ethereum if they don't have 32 Ethereum. If they have, I think the minimum is 0.5 Ethereum. So you're pretty much attributing to a pool, and that company Staker has nodes that are then doing the work of having the uptime and making sure that they're approving the right transactions and rejecting the wrong transactions. So there's that one. There's also Liquid Stake, which allows you to take out a loan of USDC based on how much Ethereum you're staking. One thing to pay attention to that is it being a loan. I'm sure there's an interest rate, and so that's going to offset any profit that you might see with your rewards from staking. So there's that. Also, if you stop staking, then you're going to be having to pay that interest out of pocket and then maybe pay off that loan some other way. But also Staker, additionally, they offer kind of not a loan, but it's like you can verify the coins that you're staking, and then you would receive ETH, their token that kind of represents your stake. You can go and sell it, do whatever you want with it. They also offer insurance as well. Is there a question?
Skynet says currently 26,460 validators on ETH 2, with another 9,400 in the queue to join. That's a lot. Worth reminding people that the queue is over 10 days. So yeah, and you cannot back out of staking. You can exit your validator, but it means you're not earning rewards, and your coins are locked up until phase 1.5. Sweet.
It sounds kind of sketchy, I'm not gonna lie.
No, I'm not gonna do it.
It is Ethereum. It's not vaporware. It's not like I really am I could be wrong, of course. Sketchy things have happened in crypto, let's be real. But it's not vaporware. They are highly motivated and incentivized to complete this process. All right, that's a little update on Ethereum staking.
Actually,
for those of you.
Really quick, last one, Skynet, that's good. Remember, if you earn 14%, you are still capturing any price increase in USD. Good point.
Yeah.
Good point.
Yeah, because then you have that as
10x though, or 14%.
Yeah.
It's going to be a hard one.
Yeah. Okay, so talk about risk, right? I found this website or this article. It's super helpful, at least the first half of it, talking about, for those of you who are really interested in getting into DeFi, or you're kind of new to it, you're not sure what kind of things are red flags, what you should be looking out for to decipher if a new coin is a scam coin or going to be a rug pull. One easy way to tell that is look for if they volunteered to have locked liquidity. According to this article, it says it essentially means that the pool's token movement is restricted by a time-based function, which makes it impossible for project owners to drain liquidity and harm investors. So really, it's talking about platforms like Uniswap or any of these kind of liquidity pool providers or even lenders where they incentivize these people to get a hold of this new coin. And at least with Uniswap, you also have to then provide, let's say, Ethereum as its trade partner, trading pair. And what a lot of these rug pulls, these founders of these new coins, what they'll do is they'll then drain the liquidity of the Ethereum into that and just flood it with that other crappy new coin that's really nothing. And then they come away with a bunch of Ethereum. So a lot of crappy things there. But anyway, you can look for, it says, one way to accomplish this is by having new projects that raise funds through pre-sales that opt in to locked liquidity protocols offered by LID protocol. The smart contracts used by LID will trustlessly lock liquidity that is injected into Uniswap. Projects that decide to pursue this course of action will be LID certified, which would serve as a sort of badge of honor that the crypto community can trust. Anyway, it's something. And it's something to pay attention to as well. Any kind of, because if a project doesn't have that, or they don't even acknowledge it, or if you ask them in their Discord channel, or if you talk to any of the developers, they don't have any interest in this, they don't even know that that's an option, that's a red flag.
You definitely don't even have anything to do with that.
Yeah, just step away, because
No
there's
way.
plenty of other new cryptocurrencies that actually have a good head on their shoulders and
Yeah.
want to provide a solution that you can participate in.
Yeah.
So in our last live stream, moving on to the next topic, we mentioned this rumor of regulation that could be pushed through before January that would require in the U.S. for U.S. Users and for U.S.-based centralized cryptocurrency exchanges, they would have to pretty much identify the owner of any wallet that they would be exiting that exchange account into an outside wallet. You'd have to identify that person.
That is crazy.
It is crazy.
Crazy, man. Like, guys, if you got the money, do what Heidi and I did.
Get out.
Get out.
And you'll be so happy if you're anything like me or you.
I mean, jeez, the U.S. government really abuses its citizens.
Exactly. And that's kind of, their
Disgusting.
excuse for these regulations is for, the safety of the investors, to protect the investors. No, it's not. It is absolutely just a barrier of entry for retail investors. That's people like you and me, not institutional investors, not banks, not investment firms, not hedge funds. Just regular people trying to buy Bitcoin. This is going to suck for you. If you're already a U.S. citizen in crypto and you just try to go through without heavy KYC regulations, it's impossible at this point unless you're using a decentralized exchange. And so I think a lot of people are waking up to that. But here is an article that talks about from Brian. It quotes Brian Brooks, the comptroller in the U.S. And he's saying that these regulations are going to be rolled out in the next 6 to 8 weeks. And I think this is one of the articles where you have to read between the lines and you have to pay attention to what they're saying and what they're not saying. So here's one of his quotes from this article. I don't think we need 50 regulations instead of 2, but what we do need is clarity about what's allowed. We need some guidance, for example, about whether banks can connect directly to blockchains as payment networks. The answer has to be yes. We need answers about whether banks can custody cryptocurrency so that institutions feel comfortable adopting, and you saw what happened when we gave that clarity. Basically, right there, he's saying, you're welcome. We gave clarity for banks to have custody over cryptocurrencies, so institutional investors entered in. So they're buying the crap out of Bitcoin, which is what we're seeing, and the price is responding accordingly. So basically, he's saying, you're welcome. We need more regulation. It's going to be better for the price. He's only talking about institutions. He is not talking about retail investors, because the kind of regulations that they're going to be inputting is a huge barrier of entry and a headache and a turnoff for a lot of regular users to do this. And it's certainly not going to encourage anyone to, exit off of a centralized exchange, which is a huge It's going to go either way. Either people, I think, are going to be flooding off of an exchange before this regulation comes in, if they're aware of it, or if they're not, they're then going to be kind of locked into that exchange because they're not going to want to have to go through the headache of identifying wallets.
My conspiracy theory is they understand that CBDCs are going to take over, so central bank digital currencies. And that they need a way to keep people from going to a black market. So if you have a CBDC, and that's the only way to, other than bartering, to buy things, and it's all controlled and whatever. With crypto, it opens the door to black markets. You can do whatever you want with that. So I think that's what their main worry is, because eventually it's going to be linked to your bio identity. You've already read The Great Reset. If you haven't, Klaus Schwab, it's a great book. It's fun to read, and you can get to see what your future is going to look like. So I think that's what is going to happen. And that's why they are kind of freaking out. They need to stop people from buying crypto because they realize it's going to, release the shackles on a lot of people, especially people that are in debt, that don't understand money. Like finally it's their chance to get out of their rat race. So, yeah.
So Bitcoin Honey Badger, thank you so much for that super chat tip. What do you
If
say?
the dollar crashes and Bitcoin is obviously pegged to the dollar, doesn't your BTC lose value also? What else can Bitcoin be pegged to? Bitcoin is pegged to...
It's not pegged.
Bitcoin is
A lot
pegged
of
to
people
Bitcoin.
value it in that terms, but...
Yeah. So it has nothing to do with the dollar. So, for instance, the Argentine peso has been dropping like a rock, right? But the price of Bitcoin has been equally rising. You know what I mean? So it's converse.
Yeah.
And so that's what people are going to use to, escape hyperinflation for some countries. For some countries, it'll be, when they devalue the dollar and then they get people on the digital dollar. So, yeah.
I mean, one Bitcoin will always be worth one Bitcoin, and that's very nice.
Yeah. Yeah.
Okay, so moving on. This article is interesting. I just want to do a quick clip it of here. What are the world's best Bitcoin investors saying behind closed doors?
Yeah, what
they're obviously saying it behind closed doors when they're doing an article on it.
He's been saying this for years and years and years.
Here we have. Oh wait, where is it?
I loved your tweet, by the way, today.
What? You love all my tweets.
When you said that you were always 10 steps ahead.
Oh yeah, that was an epic, wasn't it? The Mike Saylor tweet.
Yeah. So Mike Saylor back in 2013 said, Bitcoin is like done for or whatever.
It's like online gambling.
And you have us.
He put his entire company's value.
Yeah, exactly. So, like, we are always going to be, like, this is a guarantee. Because this is what we do all day long. He has a business to run. Yeah. He can't study this space all day long. We study this space. I'm addicted to this space. I have a problem. But because I love it so much. And so, like, we are always understanding this space more than any other freaking institutional investor. Yeah. Which means we are going to be way ahead of these guys. Yeah. So as we accumulate, they haven't even figured out what to accumulate yet. And then they will do that.
Yeah. I mean, also what speaks to the motivation behind, us wanting to learn more about this is so much more than making a profit. It's about, like we keep saying, there might come a day where your private key is the only thing you can actually fully own, irrevocably own. And there's a lot of reasons to understand this space, and those guys, they just want to make a quick buck, so they're not too interested in it. But anyway, what are the world's best Bitcoin investors saying behind closed doors? Almost everybody has a personal allocation in Bitcoin. Dan Moorhead, Novogratz, and everyone else included. An entire generation of macro investors that grew up together, went from one trade to the next, increasing exposure to Bitcoin, irrespective of the position it was in during its market cycles. These investors bought Bitcoin at 8,000, and they bought it at its previous all-time high. The big macro players identified Bitcoin as a tremendous influence on a huge amount of capital. Basically, they're all dollar cost averaging. It's something that we are constantly saying to do. It's a great investment strategy. Can be conservative. It's a lot less stress-free than trying to day trade or time the markets or whatever. Someone replied to a tweet. I loved how they phrase it. They say, we encourage time in the market, not timing the market, which is great. Now, I just want to finish up with this last article really quick.
And by the way, even Michael Saylor had purchased, I think, what was it, 2,700 Bitcoin at $90 or $19,400 last week.
Oh, yeah, that's right.
Like that.
Yeah, yep.
He doesn't care. It's down, $300? He does not care.
Yeah.
He knows it's going to be ballistically higher.
Yeah.
So, yeah.
So Bitcoin indexed at extreme greed for the longest stretch ever. Basically, the fear and greed index shows how overbought or underbought or oversold or undersold Bitcoin is. Basically, how long there's been an interest. It tests, the market sentiment of people, how much the relative price to the average. And pretty much it's saying it's been doing too good for too long and there's going to be a correction. Maybe that would be great for a lot of people who would like to accumulate more, who are dollar cost averaging, and a dip would be a happy opportunity for them. But maybe it doesn't, because like we keep saying, is that with these institutional investors and this newfound revelation of people understanding the safety and the limited supply, of the immutability of the blockchain, of the ownership aspect of Bitcoin, and they're using it as their reserve asset, that's something that I think is just going to keep growing like cancer among these different publicly traded companies. And so maybe it's extreme greed, or maybe it's just a new paradigm for how money can work, and we're seeing, you know, price discovery of a brand new asset class. And
but I mean, extreme greed. Okay, so you're talking about, you know, institutional investors' extreme greed, because that's a good thing. That's not like they're not like, they are always extremely greedy, but they're always freaking smart and on the dot. You know what I mean? Whereas you have retail extreme greed, which is totally different.
That's a good point.
So yeah, I mean, in 2016 or 2017, that was extreme greed for retail. We're not talking retail here. We're talking institution, big time, family offices, billionaires, like people with money, and they're not stupid, and they're there to hold, you know, their wealth into something that's going to keep their wealth, because they understand what's happening. They hear the Klaus Schwabs of the world going, oh yeah, we don't want anybody to own anything, and you can rent everything. You're going to be happy. They hear that stuff and they're like, screw that, man. Like, I'm going to own what I can actually own, which is your private key. Yep.
And you can secure it as much as you'd like, however you can. It's totally up to you, which is great. So thank you everyone for tuning in to this live stream. Really enjoyed it. I think we covered some good and important topics today. But anyway, look forward to the upcoming videos on this channel. This week, Wednesday, will be another edition of DeFi, of how to earn a passive income with crypto. And also on Friday will be another tutorial on how to add a custom token, talking about an Ethereum ERC20 token to things like my Ether wallet, to any wallet that you're trying to interact with. So
I'm gonna answer a couple questions real quick. Okay, so Tyler Joe Day Block says, do you have an early target to start taking profits, or do you ever see a point in taking profits? Yes, of course we're going to take profits. And if you sign up for our Patreon, you'll be able to know when we sell and what we sell within 5 minutes of us selling. Yeah. Nobody else is doing that. Guaranteed.
You can at least see exactly what we're doing with our money and why. I think it's a pretty transparent thing to do.
Where was it? Where are other inflated countries, John Atkinson? Are you seeing inflation in Portugal?
Not really. Not with the euro.
Not so much in Portugal. Not right now. No. So it's mostly the inflation is actually happening from USD to euro. So.
But where are the other hyperinflated countries? Or
I mean,
I don't think there's much hyperinflation.
You had a really bad inflation spike back in
Turkey,
like April. Yeah. Where you saw like the Mexican peso going to 23, I think,
Brazilian
to the
real.
dollar. Yeah, the Brazilian real going to I think it's called It went to like 7 almost. And then you have the Turkish lira, which is losing its butt right now, which is, I think it's about 7 to the dollar. And then you have the South African rand, which went to 19 to the dollar. Now it's back down. But yeah, like I love currencies. I'm a dork. I just love studying them because like it's fascinating.
It's a valuable thing to.
But it's really good to know, especially when trading coins as well. So, anyways, Annie, best staking coins. Check out our Patreon.
Yeah,
You'll be able to see exactly.
I actually did a deep dive on staking coins, doing a little calculation on if you invested a certain amount of money for each coin, how much you'd be earning per year. So if you're in Patreon, that post will be coming out this week as well. As our new class on Wednesday, noon Eastern time, Patreon members, if you're here in the live chat, new class on Wednesday, don't miss it. You'll see it on the Patreon post.
And yes, Tracy, Argentina, Venezuela, Turkey, Wakanda.
Where's that?
I don't know.
We had to bust out our globe.
Yeah.
Okay.
See you guys.
Bye.